Insurance issues for the 90s. The premium dollar today. Today's program, Auto Insurance Markets. Industry professionals and opposition groups talk straight about the many complicated aspects of the insurance industry. Join them as they work together toward a better communication. Jim Brown, Louisiana Insurance Commissioner. Jim Conran, Director, California Department of Consumer Affairs. Thomas B. Ahart, CPCU, AAI, President, Ahart Agency. And moderating today's program on Auto Insurance Markets, Director of Insurance Analysis, KPMG Peat Marwick Financial Services, Herbert E. Goodfriend.
Hello, I'm Herb Goodfriend, and welcome to the Premium Dollar Today. Having problems finding and affording auto insurance? You're not alone. In 1990, almost 8.5 million Americans obtained auto insurance through what's called the shared market. Our program today looks at that shared market and problems facing consumers purchasing auto insurance. Commissioner, what's the shared market, and is it true it's a mess?
Well, Herb, it is a mess. The shared market means different things in different states. It refers to giving a market to those who can't get insurance just by calling up your insurance agent. In some states, it's called a joint underwriting association. In other states, it's called a joint reinsurance pool. It either is mandatory or not mandatory, but generally, the commissioners in each state get companies together and force them in some way to offer insurance to those who can't buy insurance. Often it's the high-risk pools. It's the people who have gotten a DWI, speeding tickets.
What's a DWI?
Well, drunk driving, that's right. Okay. 28-year-old males who've had 2 or 3 speeding tickets. How do you get the tough people to insure, the high-risk people, how do you get them covered? And that's what we mean by that term.
And is it in a mess, Jim?
Well, I think there's problems in every community. In California, we find that in the inner cities, 50% of the people don't have insurance because they can't afford it. If a parent is forced with the choice of getting car insurance or feeding their children, it's a pretty obvious decision which one they're going to choose. And clearly that is a problem of government and the industry to work together and figure out how do we get these people insured so everyone is protected.
Let me just say this, though. Some people use that as a cop-out. In Louisiana, all this month, as this show is going on, we've got state troopers at every intersection, virtually all over the state, stopping people and saying, let me see proof of your insurance. And it's not a beat-up old Ford that's 15 years old. There are Cadillacs and Mercedes, people who are abusing the system. I agree with Jim, some people can't afford it, but there's an awful lot of people out there that say, I just don't give a darn, and the people that are obeying the law and buying their insurance are paying not only for themselves, but paying for that uninsured motorist, and that's one of the reasons our insurance rates are so high.
Well, Tom, let me ask you, should everybody have the right to drive in such event? Maybe there are people out there who are dangers not only unto themselves, but to others and shouldn't be insured.
Well, I think everybody's entitled to insurance. I think that under
as an agent.
Yeah, under the shared market, I believe though it should be limited. I know in New Jersey now we just had a change in law where only 10% of the people can be in the residual market or the shared market. 90% of the people have to be in the voluntary market.
And that's markedly different from what was the case a couple of years ago when there were a lot more people in the residual market?
There were 42% of the people in New Jersey were in the shared market or residual market.
So 4 out of every 10 persons was a bad risk?
Well, actually, it wasn't necessarily a bad risk. What was happening there was the fact that voluntary companies weren't writing any new business. Therefore, if you couldn't get insurance elsewhere, you had to get it in the shared market.
And why weren't they writing in New Jersey, or for that matter, Louisiana or California? What is it that drove the companies away?
Well, I think that for the most part, the government is involved too much in insurance. And the
state government?
The state government, and doesn't allow the insurance companies to make a fair rate of return. It's a fine line between availability and affordability, and I think a lot of times the insurance departments change the rules as they go along and make things retroactive so that the companies can't plan and aren't willing to invest their dollars in auto insurance.
Well, there's an old saying, what the government giveth, they can taketh away, too. And that may be the case. But, again, you have a situation in California where rates had gotten so high that the public revolted. They instituted Proposition 103. Whether it's good or bad is now history.
You might tell our audience in due course what Prop 103 is.
I will be happy to do that. It was a proposition that was designed to roll back rates and put in a new regulatory scheme in order to contain the cost of insurance, to make it affordable. But the problem...
E.g., what, 20%?
20% rollback. The problem is in California is still the rates are so high that many people are not insured. Not because they don't want to be. There is a law that requires you to be insured in California in order to drive. They just can't afford it. There are communities where people are just not offering insurance because it's not profitable to offer it there. So I think that is the role of government, to go in there and work with industry to figure out, we have an agenda, we want to make sure people are covered, they have insurance, and we have to work together to make sure that that comes about.
But why was the law, for that matter, not only in California but perhaps elsewhere, instituted to mandate a rollback of rates? If the companies aren't making money, it seems out of sync with what
who's
you're
to say that? That's one thing, and we've had several points of view here. That pendulum's gone one direction or the other. In the past, insurance companies could do anything they wanted. They had a cozy relationship with regulators, and things were completely out of whack.
Though.
Well, all over. Hey, my last two insurance commissioners before me have gotten indicted, so we've had some big problems in Louisiana.
Yes.
But now, then the pendulum has swung back the other ways. In California, I think the consumer interest came on so strong. Where do we get that balance? For example, should an insurance company have the right to make money in every single line they write? Or should they make a little money here, perhaps they lose a little money here, and in the overall balance, they should make money? They have to make a profit.
You're asking a rhetorical question?
Well, I'm not sure that in automobile insurance that every company has a God-gifted right to make a 15% return on their money. Perhaps they lose a little in auto, make a little in property, and it all balances out where they make a profit. Those are the kinds of things that regulators have to be there to balance out, and that's what we're soul-searching and struggling about as we speak.
The issue, though, also goes beyond regulators, government, and the industry, and there are other problems in society. You have a lot of fraud, people who are claiming they're injured, they're not, so you have doctors involved in this, you have lawyers involved in this. There have become a whole cottage industry of people who are victimizing the system, which passes that cost on to everybody. That everyone is forced to deal with the problem, whether they want to or not. Now, in California, there are other schemes that people are proposing. One is adding, and I know you've done this, you tried this in your state, was to add a tax to the gasoline in order to make sure that everyone would be covered. No matter what you try, someone's going to win, someone's going to lose.
We'll be back in a moment to discuss these matters and more. Welcome back to the Premium Dollar Today. We're discussing auto insurance and the problems for insureds. Tom, the problems to which both Jim and Jim referred earlier, the shared market, the rising cost, and the pulling out of companies, how has that affected your role as an agent, and what is the individual doing in such event who needs insurance?
I get yelled at a lot, for one thing, by all the insurance consumers to come in. Right. Number one, it seems like the consumer comes in and gets very upset when there isn't any insurance available. And if you tell them that you can't put them anywhere, it's very hard for them to understand.
And is that true for people whose driving record is good? They happen to live in the wrong zone, or they have the wrong car, or what? I mean, suppose a person is not of his own or her own fault, but can't get the insurance. What happens?
It depends on the state, but the way it used to be in New Jersey was if companies weren't writing voluntarily, then the only place you could put them was in the residual market where the rates were extremely high. And even though they didn't have any accidents or violations, they were paying a very high rate,
yes.
Which was very upsetting. Now it seems like New Jersey has turned it around a little, and people go to the residual market if they have 9 or more points or a DWI, driving under the influence, or something like that.
You would call the residual the shared market.
The shared market,
to which
right.
we referred before.
Correct. Otherwise, they have to go to a voluntary company, and they can pick and choose, and every company has to accept them if they meet the guidelines.
So are they less on your back these days?
Less on my back.
Well-tempered?
Yeah, less on my back because we can provide insurance for them, and also less on my back because they can go to the voluntary market and aren't paying the extremely high rates of the assigned risk
But they're
plans.
still paying relatively high rates?
Yes, New Jersey, I believe, is still #1 in the country as far as rates go.
And what has it done to rates in your communities?
Well, rates have gone up, and that's where the regulator comes in. Let me say this. We've got a number of insurance commissioners throughout this country that are starting to look at that balance. Maybe we shouldn't be talking about social engineering when you talk to regulation, but it's something we've got to do to respond to New Jersey, to respond all over the country, and we're doing that in Louisiana. Number one, we've got the residual market if you've got no other place to go. I've shut down 23 companies since I've been insurance commissioner in Louisiana, and one thing I've done is rehabilitate a couple of those companies. We're running those as state insurance companies.
Why did you shut them down, Commissioner?
Well, because they were so broke they couldn't pay their bills.
In the auto-related areas?
That's right, and you know, to the consumer out there, they want the cheapest price, but the competition got so great the price was so cheap. You could buy car insurance 2 years ago in Louisiana for $200 a year.
Why didn't you call me and tell me about
Well,
it?
everybody flocked. The companies went broke. They weren't paying claims. So you got to get a reasonable return, and that's where the regulator comes in. We don't want companies gouging the public, but you've got to charge enough to make it all work, and there's that balance. Now, we formed a couple of companies that are owned by the state of Louisiana selling insurance right now. We shouldn't be doing that in the long run. We're going to sell those companies, but it's that balance we're trying to bring about to get over this hump. And I think for the first time, commissioners all over America, and I can give you a number of names around this country, are getting into it and doing some social engineering just to try to tone it all down and get that middle ground that we haven't had in the past.
Well, you want the marketplace to work as best as it can, but we as a society have always done social engineering. You and I pay for roads in Montana that we'll never drive, potentially. There are dams in other parts of the country providing electricity that we all pay for somehow through the federal government. So there has always been a level of social engineering, the public schools, the postal system, all that kind of stuff. But as in your case, when there is a vacuum there, it is the role of government to step in and make sure that people do get some type of coverage. They need it. And it is also the responsibility of folks in the industry to willingly participate in that and come up with the design.
But in this social engineering, Jim, or as some people might term it, tinkering, has it been beneficial to the consumer in California, for example? Have they gotten $1 back from Proposition 103 refund?
A few companies have given money back, but the answer is no. It hasn't been done. We have not really aggressively looked at those markets that are not being served and figure out how do we do that. In California and most states, for instance, in telecommunications, that there are lifeline services that all the consumers help pay for too, because we have decided in California everyone should have a telephone. It makes good sense. Well, I think we also need to decide everyone in California must have auto insurance. Now, whether it be no fault, which has its ups and downsides, or some type of social tinkering, whatever you want to do, government and the private sector must work together to make sure everyone has some type of coverage.
Now, you know, Jim dismissed that gas tax idea. When everybody, all these viewers hear gas tax, my God, no gas tax. It's a pretty interesting idea. Andrew Tobias, a national insurance consultant, has a plan that California is looking at, we're looking at, that does this. You put an extra 30 or 40 cents a gallon on a gas tax. Now, don't go bananas out there, folks. But then, when you figure out the numbers, you get your first basic insurance, maybe $10,000 insurance, free. It doesn't cost you anything.
Let's be a little more specific, sir, about
Well, nothing is free.
This gas tax to which you alluded, not the energy tax that is proposed.
Not that the president's performing. But this is an assessment on your gasoline that goes into a state pool.
And is used for what purpose only?
All right, then what it means is the 40 or 50% Jim's talking about in California that are going off without buying any insurance, they've got to buy insurance because every time they fill up and get a gallon of gas, then they have to pay the tax. It goes into a pool, and then when it comes time for them to get their auto insurance, as it's envisioned, you don't pay anything for your auto insurance.
This is called pay at the pump?
Pay at the pump, that's right. And the numbers work out. In Louisiana, you'd say every single driver on their basic insurance would save about $250 a year. Now, the problem is, people go nuts when you talk about a gas tax, and they don't understand it. When I explain it the first time, they say, no, no, no. The second time, no. The third time, the fourth time, hey, that's kind of interesting. But I think we're going to have to look at some fairly radical things. You can't drive a big car, your car get 15 miles to the gallon, you can't drive wherever you want to and expect cheap insurance. It's just not going to work in America today.
Now, what do you do about the people who live in rural and farm communities where they drive big distances?
Well, California is very different. First of all,
everybody's in the car in California.
Well, but also our population is shifting inland. That because homes are so expensive in the urban areas, people are commuting much greater distances. And it will take many years for the rapid transit system, if it can even be done, to meet those needs. So we have a migrating population that's moving further and further away from the jobs because that's where they can afford to have
perhaps out
homes.
of California altogether.
Well, that some are doing that. But the problem is with the gas tax, and there are up and downsides to everything, it for many is a regressive tax. If people have to live somewhere where they can afford to buy a home and they have to commute further distances, they will be paying it. I heard one woman describe this as, it's a great program for those who don't work, but for those who do work, they're the ones who are being penalized. And I think it is not a viable political issue in California. I think while they may have hearings, it will never fly.
You know, one problem I have with that is that consumers, they come in my office, they're looking to save dollars they're spending. Now, if you tell them that you're going to reduce their premium from $1,000 to $800, so they'll only pay $800 for insurance, but then you're going to pay $200 extra in gas, they haven't saved any money. So The problem I have is I don't think they're saving actual dollars. New Jersey came out with a program before to reduce auto insurance, and they raised registration fees, and it was the same type of thing. So I think what we need to do is look at ways to actually save dollars and correct the problems by getting rid of lawsuits, reducing awards, and types of things like that.
I'm glad you focused on that, Tom, because a substantial part of every dollar of premium is not the expense of acquiring and maintaining that dollar of premium, but fraud, legal expenses, medical care, and the like. What's going on in your areas to cut or eliminate or reduce these important variables?
Well, I think in every state, fraud is a major problem, whether willingly or unwillingly people participating. Our biggest problem, I think, though, in California is that so many people are not insured. Most consumer groups and minority activist groups in California have been pushing for a true no-fault system. They believe that that is the most viable option in terms of using the marketplace to reduce cost, to keep costs down, and end this litigated game that everyone seems to be playing right now that is just, I'm sure in your state, has just driven costs beyond control.
Jim, in your state?
You know, it's easy to look for the bad guy and blame it all on one thing. Lawyers should carry their share of the blame. Lawyers need to be toned down, and we ought to look at no fault. It's interesting, though, no fault seems to work in the states that have had it for about 20 years. Georgia, for example, passed it 3 years ago, said it's not working with the darn, and now have abolished no fault. So the states that have had it for some years and have the experience seem to be doing a lot better.
We'll be back in a moment to discuss these matters and more. Welcome back to the Premium Dollar Today. We're discussing auto insurance and its implications for consumers. Commissioner, we alluded to before the impact of no fault in certain states. Do you have it in your state? If not, why not? And what do you see as its future in your state and elsewhere?
I think there's widespread interest in no fault, more so than I've ever seen before. We don't have it in Louisiana, but our legislature will be considering it this spring. I notice around the country, a number of states are really looking at it very seriously. You get into what the level is of what we call a verbal threshold, and basically what that means is you can't go in and sue the other guy. You basically insure yourself, and there's no fault, so you take care of your own business up to a certain point. But if you are seriously injured to that point, you can go ahead and file a lawsuit. Now, the higher the threshold, the more money you can save and the better it works. The problem is that there's no consensus as to what that threshold is. There's just no quick fix in this business. Anybody that thinks you're going to pass a law and overnight reduce by a third auto rates, it's just not going to happen.
In the areas where no fault has been in bed for a long time, has it been effective? Has it helped the consumer? What's been its impact?
I can speak from New Jersey. We've had no-fault law since the early 70s, and at first it was absolutely horrible. You got to remember that the purpose of no-fault was twofold. One was to first make sure that the first-party benefits of medical bills and lost wages were paid right away, and that people didn't have to wait to sue in order to recover their medical bills. And that was working fine. But in New Jersey, the second part of it was so that you didn't sue as often, and it reduced litigation. And in New Jersey, that didn't happen at all because we had such a weak no-fault. We were paying everybody's bills right away, and then they were going and suing automatically anyway for whatever they were collecting before. So we were really paying double. Now we've gone to pretty close to New York's version of no-fault, and it includes a verbal threshold. We actually give a choice. People who select a verbal threshold, again, get their own lost wages and medical bills paid by their own company.
And they get it quickly?
And very quickly. And then they can't sue for pain and suffering unless they've had a very serious injury like a fracture or some kind of permanent disability.
And who makes the judgment call on the degree of difficulty?
It's pretty specified in the laws. If it's a fracture, it's automatically one that can be litigated. If it's permanent, they'd have to be out of work for like 90 days. So it's pretty well specified in the law. They can also choose an option for a larger premium to be able to sue from $1, and that premium difference is very large, and like only 10% of the people are actually choosing that now.
In a state such as California, where everybody drives and spends a lot of time in a car, why wouldn't a no-fault work, and why hasn't it been installed?
Well, I think no-fault is one of the many answers to our problems in California. You know, they talk about a home may be your castle. Well, in California, your car is your soul. I mean, it is the part that unites everyone. It takes you to work, pleasure, all the things that we do. So a car is very important to folks in our state. No fault has not gone through because it's been blocked in the legislature. By the Speaker of the Assembly has not been an advocate of no fault insurance. We think that it would work. The administration, Governor Wilson, has supported on 2 occasions the efforts to have no fault, a meaningful no fault, very similar to the New York model that we think would work well in our state. But again, it is not the only answer. It is one of a series of things. Combating fraud, this I think will help combat fraud, because you will not have people running right away to either an attorney or to another doctor who's, it's in their economic interest to keep you and not healing very quickly.
But
having you come
is
back
fraud so important that we have to really get it down and measurable? I mean, what are we talking about as a proportion of the total cost, and how, you know, how
we think in California it may be as much as 25% of the problem. The other high area of problem is the amount of people who are not insured at all, that cause a lot of the accidents and then take off, and that puts a lot of strain on the system as well.
Is this one of the solutions, Commissioner?
I think definitely. We are insisting every insurance company have a fraud plan. I've just formed a fraud unit in the Department of Insurance. We are actively prosecuting a cross-section of people who perpetrate fraud. Those who fake claims, the doctors, the hospitals, the lawyers. There's lots of fraud out there. And so that's a big part of the solution. I agree with Jim. Doing that.
What about the repair community? Are they involved in fraud as well?
We are starting units right now that are going in and getting estimates on repairs. We've got examples right now where the repair shop will say, oh, hey, it's going to cost about $800. Why don't I put down maybe $2,000 and I'll bill you $1,000 and maybe I'll keep the difference, and you want to work something like that out. Those people are being prosecuted in Louisiana, and I think there's a lot more interest in that kind of thing all over the country.
Tom, what other solutions beyond better no fault and fighting hard on fraud can you see evolving?
There are some unique approaches that that I've listened to and read about, and one of them, for instance, is making auto insurance similar to workers' comp, and that you have your own workers' comp courts or no-fault courts, and that people would have to go in, and instead of actually suing for hundreds and thousands of dollars, they'd go to this court of maybe retired judges or whatever that would arbitration similar, right, that would come up and see what the award would be, and you know, who was at fault and that type of thing. And until we are able to reduce those types of costs, you know, somebody that gets $1 million award, it takes an awful lot of premiums to make that up. And
did you have trouble for yourself and your family getting insurance and holding it at a reasonable price in New Jersey?
Not for us, only because we've had companies in our office that have continually been able to write voluntary business.
Tom, I'd like to think about the future. I know you think about it anyway, but more specifically as it relates to auto insurance and the shared market. If we meet again in 3 years, how would you have liked it to have changed? How will it have changed? And what are the probabilities in between for even more improvement than we see today?
Well, I think that in New Jersey, things are going pretty well right now, only because what I would like to see in the future is that the shared market be as low as possible. To me, the shared market should be for those drivers who can't get insurance elsewhere because of a poor driving record. And they belong...
And no other factor.
And no other factor. And I believe they're the ones that belong in a different market. They know what the penalties are, and it would encourage them, hopefully, to drive safer and to watch what they're doing. So I would hope that that continues. I think that we've talked about fraud and things like that. We also need to address the medical issue, and a lot is going to have to do with how they address the health insurance issue throughout the country.
Okay.
And that's going to have a big impact on the insurance rates.
Jim?
Well, I think
what's your crystal ball like?
I think in California we'll eventually see no-fault insurance.
Eventually is when?
Well, I'm not a betting man, so I'm not going to. Yeah, definitely within my. I think in the next few years we'll see it. I just think the issues, Proposition 103, cannot correct all the issues that the consumer thought it would. So I think no-fault is definitely a step in the right direction. Some type of, as you said, social tinkering in terms of policies being delivered in communities where right now industry will not go in and serve because it's not very profitable.
No elimination of contingency fees for the lawyers?
Well, you know, no fault will take away a lot of that because it'll be dealt with in-house. But you can still, if I certainly would think if you don't think your insurance company is treating you fairly, you can sue your insurance company.
Is that why no fault's being taken out, or it hasn't been put in California because of the fight of the lawyers?
You know, I don't want to be a lawyer basher. It's very easy to do, but their economic interests are directly adversely impacted by no fault, and they have certainly been the strongest lobbying group against it.
Strong fraud laws will reduce things dramatically. More consumer awareness, paying attention to what you're doing and know what you're buying. And then third, more competition amongst healthy companies. Commissioners are doing a lot. We're doing a lot to get a good group of healthy companies, properly regulated, who can do a lot more efficient job than they're doing right now in terms of the paperwork, handling their claims. Those are three important factors 3 years from now that I think can make a tremendous difference. No fault is a potential solution. I think on the table right now, there's a lot more thinking going on than there was 2 or 3 years ago. We'll go a long, long way in the next 2 or 3 years.
As you can see, auto insurance markets are dynamic and controversial. I'd like to thank my guests, all of whom know their topic well, for providing such valuable insight and information, and invite you to join us next time on the Premium Dollar Today.